What is going on, everybody? We are back here live again with a stream on a Friday night. We are talking about how to set up moving average inside of TradingView. This is our chart here showing the S&P 500 or the SPY. We've got it set to daily candles here in the top. You can toggle those on and off if you want. We're hour, 15, 5, monthly or more. You can put the candlesticks right there. But what we want to do here is put on moving averages, and specifically we want to target a couple different ones because these ones will actually set us up for success in our trading strategy. And here's how we go ahead and do that right now. So make sure you stay to the end of this stream to make sure you understand what these strategies are and how they work. But here's how we go ahead and set them up right here. Indicators at the top is the easiest way. Click there and you can search any kind of indicator that you want. You can also go through and click the technicals or financials here. But for our purposes, we're just going to type in MOV, moving, and you'll see the technicals pop up. And all we want to do is click on the one that we want here. In our case, it is moving averages. If you want to star that for next time, you can do that and it will stay on the favorites tab and you can always go back to it and see it right there. So we're going to click on moving average, and the first time we click on it, nothing will pop up, but you see this little MA9 will pop up here in the top left corner. That means the 9-day moving average has been added to our chart, and it's represented right now by this blue line, okay? So we're going to go ahead and customize this right now, but that's a super simple way to get it on the chart. Let's customize it. And let's go to the settings here for it. We click on the gear icon, the settings pop up, and you can change the length. And the length is going to represent the different amount of time that your moving average calculates in order to smooth out the line. So if you have a small line of 9, it's going to take the previous 9 trading days and plot a average price on a line. If you back that up to 200 days and apply that, it's going to be a very slow reacting line based on number 9 because the 200 days is more data to process. So the curve of the line isn't going to be as quick to update over time versus a 9-day. So let's make this a different color now. We go back into our charts with the gear icon and we go into style, and then you can go into click color. Let's make this one yellow, and you can actually change the different layout of it as well if you want to. We're going to leave it kind of the same kind of thing though. We're going to keep it aligned. You can do a histogram, cross, it all changes underneath, and you can zoom in if you want to. It's up to you. I like to keep it as a line because it's very simple, and you can change different things on here as well. You can also make it a default. So if you want to save it as a default, if you do that, next time you go ahead and load in a moving average, it's going to default to these settings that we have right now for this moving average. So it's a quick, easy way to go ahead and save it as the default and get your moving averages onto charts if you're making lots of charts on the fly, okay? Now let's put on another one and I'll show you the difference here between the couple. So if we want to go ahead and put another one on, indicators, we'll go back to our favorites here, or we can go into technicals and just search through, but let's go to favorites, moving average. Boom, another one's showed up right here. I'm going to close this down and we're going to make this one a little bit different. We're going to change the style up again and make it a green one. And we're going to go ahead and make it a 50-day for 50, so 50 days of data. And now you see this is updated right here in the green, and it's going to show you a price as you go through with your crosshairs as well. Every time you go through and change a day, it's going to give you an updated moving average price on your legend here. So now we've got the 50, we've got the 200, and let's add one more moving average in here. And let's go ahead and just click that. Boom, it's in there. And let's go and do let's do a 21-day moving average just for kicks. Okay, it's about a month of data. And I'll make this one like a nice rosy color. So as you can see here, you have 3 moving averages, all different days showing different amounts of data. If you have 21 days of data being compounded on your line, it's going to be very quick to mirror the market. You can see this rose line. It follows the stock market pretty quickly, whereas the 200-day is a big looping line because there's way more data points in the 200-day versus the 21-day. So the line's not going to be as quick to react. And the 200-day is generally a year-long trend line. The 50-day is kind of a 2-month trend line. And the 21 or 25-day is like a month-long trend line. So those are the 3 moving averages you're going to have on most of your charts. I like to use 50 and 200 myself. And if you want to ever take these off or just momentarily pause them from the chart, you can click this little eye icon and hide it, and it'll actually still stay loaded on, but it'll be hidden on your chart here in TradingView. If you have a limit to how many indicators you have to have and be able to have, you can actually go ahead and click the X button to delete it and remove it, and you're left with just the 2 moving averages right now that we see here. So what we want to understand is that moving averages are areas of support and resistance, and they can make big bucks for you if you understand that if a year-long trend is a line of great significance because the stock market tries to hit that line right there, right there, right there. We just broke above it. So if you can see those points and see where it kind of goes and runs to, you can use the 200-day as a baseline of where the stock market might go, and the 50-day acts as kind of a additional support and resistance line because it is a 2-month trading area. And if you ever see the 50-day cross above the 200-day, like it's about to right here, it's getting very, very close right here. If this green line pops above that yellow line, that's known as a golden cross, and that's a very bullish sign for the stock market. It happens, and then usually it means that there's been a significant period of bullishness and a improving market conditions. So it usually signals a run is going to happen quite soon after. Nobody can make predictions or kind of assumptions on if that's going to happen or not, but that's what we're looking at if we're in here trying to go ahead and just understand where the market may go. It may go up, it may not, but the golden cross is a very good signal once that actually occurs. And just conversely, if you see the green line go underneath or the 50-day go underneath the 200-day, it is a bearish sign, and it is a sign that the market is likely to sell off, which it definitely did in this case going back to March of 2022. Hope you guys got some good value here for moving averages. If you want to do one more trick with them and you want to just go ahead and save your chart layout, you can also save a layout with these two moving averages on here as your default. If you go back into the top here, you have different layouts. You can save a layout and you can export the chart data, and you can make a copy if you want to, but it can actually just go ahead and be one of your chart layouts that you use and use it all the time, and go ahead and trade from there. So if you got some value, please like and subscribe to this video. Just a quick hitter on a Friday night for you guys, and I hope you guys have best of luck with your trading, and I will catch you guys on the next video.